Hey traders, welcome back to the channel. Today we are diving into one of my favorite day trading tools, the initial balance. So whether you're trading futures or any other intraday market, understanding how to use the initial balance, it can add structure, context, and edge to your trades. So let's get into it. All right, so what is the initial balance? The initial balance is the first 60 minutes of the open. So in this example, I'm going to share with you the New York session is from 9:30 a.m. to 10:30 a.m. Eastern Standard Time. So that first 60 minutes of the session, it creates a range. You have your initial balance high and your initial balance low. So here, this blue line is the 9:30 point. The other blue line is the 10:30 point. There's your price action. The green line is the high of that range that was traded within the first hour, and then you have your low of the range that was traded within the first hour. So that is what the initial balance is. It sets the tone for the day, so you can kind of get a feeling for how trading is going to play out for the day. Is it an uptrend day, a downtrend day? Is it a choppy price action day? You kind of get a feel for how the rest of the day is going to play out with the initial balance. You can also take two trade setups that I'm going to talk about from this initial balance, or also called IB. The first one is a failed auction. So here you have that same 60-minute range, high and low. As price continues beyond the first hour, in this example, a failed auction, it briefly trades above the initial balance high, and then it closes back within the range and it continues lower. In these examples, you can typically target the midpoint of the range, or sometimes even target the opposite end of the range. So that's trade setup number one. Number two is a trend continuation. So again, you have the first hour of trading, and then price action continues. In this example, it continues up above the initial balance high, comes back down, retests, and goes higher. You can have the same example as a short as well. If it breaks below the initial balance low, retests, and continues lower for a short. All right, so let's go into some live examples here. I have the date backed up to the open. So let's put this in replay mode and go ahead and set up our first 60 minutes of the session so we can get our initial balance range and then see what kind of trades we can get from there. All right, so the first hour is right about here. I'm gonna go ahead and stop the replay there, and we'll mark out our range. So this is the opening candle right here. So this is the initial balance low, and then this is the initial balance high. So we're looking for a trend continuation or a failed auction. Let's see what we can get. So wait for it to retest and end one of the ends of the range. All right, so here we go here. This is breaking outside of the initial balance range. So are we gonna get a trend continuation, or is it gonna be a failed auction? A couple things I'd be looking for here in terms of confluence, because it's not as simple as if it breaks below, it's gonna be a short. Looking left, there's a lot of liquidity here. And the NASDAQ, for example, likes to grab liquidity and then move in the opposite direction. So here you see the wick, a wick, a wick. This is a strong support area. So without knowing what's gonna happen, I would not immediately take a short on the break and retest to continuation lower. I would consider a possible failed auction here. So let's see, you always want to confirm what happens at this initial balance low. If we start to reject, it would be a continuation lower for a short. If we start to close back within the initial balance and hold it above the initial balance, then we could continue higher for a long. So let's see what happens here. All right, so obviously this is happening in a much faster pace than it would be live, but it did what I was saying. It grabbed that liquidity and it held above that initial balance and is continuing higher. So in this case, you could have, if you know about liquidity sweeps and all that, you probably could have entered your long somewhere in this region. But since this video is about the initial balance filled auction, once it starts to confirm that it's closing within the initial balance range again, you can enter your long there and then put your stop loss closer down here. So the targets on this, a lot of times people will target half the midpoint of the range, which in this case is actually right in line with VWAP, which is another tool that I use. So you can take part of your profits there and then hold a few contracts left for the end of the range. So let's see if we get all the way up to the other end of the range. All right, there you go. So you would have taken full profit there. Let's see if we get any other trades off of this range, if we're gonna get a continuation, or you can also get another failed auction on the other side of the range. So without having an actual trade setup, just kind of watching price action here, this to me looks a little bit weak. There's not any continuation higher now that it is above that range. If we were gonna get a break, retest, and continuation, sellers probably would have shown up. There's not a whole lot of momentum there. So I am going to be watching for another failed auction. Let's see what plays out here. Sellers are still kind of taking control. There we go. That's a little bit more. Still not any continuation to the upside. Showing weakness. All right. So I couldn't stop it fast enough to show you my thought process here. But now that we're closing below the initial balance high and starting to chop around and reject that high, that for me would be a good short opportunity. So I would take a short in this choppy area. You could put your stop loss above that previous wick high. And again, like I said before, partial profits at the midpoint of the range, and then the remaining profit at the bottom of the range. So let's see what we get out of this one. Rejecting the initial balance high again. And there we go. You would have gotten full profit at the bottom of the range again. So it doesn't always happen this way. This happened to be a good example that I pulled up. But a failed auction, target the midpoint of the range. The remaining target can be the end point of the range. And then same thing, watch for it the rest of the day, possible to get another one. So I don't have an example on this day to share with trend continuation, but up here, as it broke above that initial balance high, if it had come back down and retested and gotten some momentum and continued higher, that would have been a good trend continuation example. And in that case, if that were to happen, you could have targeted this resistance area here, which actually it did. So there actually was a long opportunity, again, in hindsight, of course. But if you were to take, let me spread it out a little bit without showing that wick to the left, you can take this where it's holding the initial balance high. You could have taken a long there around this region after it got some momentum up in this area. Take a long and then put your stop loss below those previous wicks. And then I would have looked left for the most recent resistance, which is right about there. And that's actually exactly where we went. So that would have been a win on the long side as well. So this one day right here gives you 3 trades off of the initial balance range. You have a failed auction, you have a small trend continuation, and then you have another failed auction. So you would have gotten, with partial profits taken out halfway, there's 62 points, there's 25 points, and there's 67 points total on the NASDAQ. So fantastic strategy to learn. All right, so what are some tips and what are some mistakes to avoid when you're trading the initial balance? The first thing is stop trading every breakout. Not all trades are valid. Look for multiple confluences to support your trade. Another mistake is ignoring broader context. So is there a news event that's coming out? Is there an FOMC release that's coming out? What's the trend? What's the overall trend? So if the overall trend is up and you're trying to short, you might be in a little bit lower probability. And then volatility. If it's a really choppy day and there's not really any momentum in either direction, then you might get chopped out. So looking at other confluences to support your trade is something that's going to help out a lot. That's a pro tip. And then also not waiting for a retest or confirmation before entering. So like in some of the examples that I gave you, don't just trade the first break of the initial balance high or low. Don't take an immediate short on the first red candle or an immediate long on the first green candle. Wait for confirmation, be patient, wait for those candle closes, look for confluences, look for support and resistance. So use this initial balance strategy as another thing to add to your list of confluences to make your trading even better. So the initial balance gives you structure. It's not a signal on its own. It's a framework that you can use. And once you start marketing up daily, you'll start to see repeatable behavior in how price interacts with the initial balance high and the initial balance low. All right, drop a comment if you've been using the initial balance or if you plan to, and let me know what your favorite setup is with using it. If you found this helpful, hit the like button, subscribe for more trading strategy videos, and I will catch you in the next one.